the show that unpacks really complex stories, pulls out the key insights, and lays them out so you can be genuinely informed without, drowning in information.
And today, we're tackling a big one, a really dramatic story.
Yeah, it involves a high-profile billionaire, an absolutely staggering amount of money. We're talking over $2 billion. That's more than, 13,000 crore.
Huge numbers.
And it all centers on a financial system that looked solid, foolproof even, but was actually full of holes.
We are, of course, talking about the Nirav Modi banking fraud case.
Exactly. So our goal today in this deep dive.
Well, we want to unpack exactly how this massive fraud happened, how it went on for years, literally under the noses of regulators and the bank itself.
And not just the how, but also the hidden mechanics, the stuff that allowed it to keep going.
Right, and then explore the fallout, the ripple effects it had and continues to have on India's whole financial system.
Think of this as your shortcut, your fast track, to understanding a really complex, significant financial mess. We'll give you the specifics, the kind of details that you don't usually get from just the headlines.
Okay, so let's start at the center. Who is Nirav Modi?
Before this all blew up, he was, a big deal. An Indian billionaire jeweler. He had this global luxury brand under his own name, the Nirav Modi brand, famous for high-end diamond jewelry.
Very high profile. And there's an interesting family connection too, right?
Yeah, his maternal uncle is Mehul Choksi, who owned Gitanjali Gems. They were business partners too.
Which isn't uncommon in these large family-run empires, but definitely adds another layer here.
Okay, so let's talk scale, the sheer size of this deception. You mentioned the numbers.
Over 13,000 crore rupees, roughly $2 billion US. Just immense.
And the main bank hit was Punjab National Bank, PNB, India's second largest public sector bank, a major institution.
And this wasn't just, some accounting error. This was deliberate bank fraud.
Specifically using forged documents, right, to get credit overseas.
Exactly. Getting loans from foreign banks based on guarantees that were essentially worthless because they weren't properly backed or even recorded. Critically, no real collateral.
Okay, let's get into the nuts and bolts, the mechanics. How did they actually do it? Step by step, how did this work without anyone noticing for so long?
It starts with something called Letters of Undertaking, or LOOS.
Right, LOS. Those are pretty standard in international trade, aren't they? Like a bank guarantee for importers?
They are. Normally, they're a legitimate tool. A bank tells another bank, usually overseas, hey, we guarantee our client, the importer, will pay you back for this short-term credit.
Okay, so how were they misused here?
Well, Nirav Modi's companies, firms like Diamond R US Solar Exports, they got these LOOs issued by one specific PNB branch, Brady House branch in Mumbai.
But the key was?
The key was these LOOs were completely unauthorized. And crucially, no entries were made in PNB's main computer system, the core banking system, or CBS.
So they were off the books internally.
Completely invisible to the bank's central record keeping. No collateral logged, no liability showing up on the main system. This is how it went undetected for, nearly a decade.
Wow, an internal black hole. But wait, how did the money actually get requested and transferred globally? Don't banks use systems like SWIFT for that? Wouldn't that raise flags?
You'd think so. And yes, they use SWIFT, the Society for Worldwide Interbank Financial Telecommunication. That's the global messaging network banks use to communicate securely, send payment orders, issue these kinds of guarantees.
So the fraudulent LOOs went out over SWIFT.
They did. But here's the other critical flaw. PNB's internal CBS system was not linked to its SWIFT system.
Wait, seriously? The system sending out global financial guarantees wasn't connected to the bank's own core accounting system.
Bodi pashud. At sagne prize yo egg coaches yo. Old kunajio go.
Samek ya. Couch have the hops on it. She got sunshine and she can.
Kenda.
Kenda. Nanda. Hendra. And on her hand. I can't. When he's at Oracle.
What is boo? Kamatanma.
Booyah. That's my car. It's astonishing. So PNB was effectively blind to billions in liabilities being created in its name globally, because these two essential systems weren't talking to each other.
Precisely. A massive systemic gap.
So Modi's companies take these dodgy LOOs, go to overseas branches of other banks you mentioned, Alva Bank, Axis, UCO.
Among others.
And they borrow money based on these PNB guarantees.
Yeah.
And then they just didn't pay it back.
That's right. They defaulted. And because PNB was the guaranteeing bank, the issuer of the LOO, PNB was legally on the hook to pay those foreign banks back.
Billions of dollars. Wow. Okay, so this house of cards built over nearly a decade, from 2008 to 2017. How did it finally come crashing down?
It actually unraveled almost by chance. In January 2018, Nirav Modi's firms approached PNB for another set of loose.
They went back to the well one too many times.
Seems like it. This time, though, there were new people, or procedures, and they asked for the proper collateral backing the 100% cash margin required for such guarantees.
Which, of course, they didn't have because the whole point was to get credit without collateral.
Exactly. And when they argued, saying they'd received loose without collateral for years, that's when the alarm bells finally went off loud enough.
So the bank digs in and finds nothing in their core system but evidence of these guarantees existing.
Precisely. They uncovered the irregularities, realized the scale of the potential fraud, and filed a First Information Report, an FIR, with India's Central Bureau of Investigation, the CBI.
And Nirav Modi, where was he when this was all hitting the fan?
Conveniently, he'd already left India, weeks before the FIR was filed, apparently using a diplomatic passport he held.
A diplomatic passport. How did he have one of those?
That's another complex part of the story, related to government processes for certain business figures. But yeah, he was out of the country.
He eventually surfaced in the UK, right? And was arrested.
Yes, found living in London and arrested there in March 2019 following India's extradition request.
But the arrest is just part of it. The really fascinating and frankly disturbing part is how this went on for so long. Let's get beyond the headlines now. What were the hidden factors, the complicity?
Well, internal complicity was definitely a major factor. Bank officials were involved.
Anyone specific named?
Yes. Gokulnath Shetty, who was a deputy manager at that Brady House branch for a long time, has been prominently named in investigations. He had retired shortly before the scam broke.
And it wasn't just one person, presumably?
Investigations point to collusion. And critically, standard banking norms, like rotating staff between positions and branches regularly.
Yeah, that's done precisely to prevent someone from getting too entrenched and being able to manipulate things long term.
Exactly. Those rotations were reportedly avoided for key personnel at that branch. Some people stayed in sensitive posts for years, far longer than regulations allowed. That enabled this kind of long-running fraud.
So, internal rule bending, maybe active collusion. What about the actual business these loos were supposedly financing? Was it real?
That's another layer. Much of it seems to have been phantom trade.
Phantom trade, meaning?
Meaning the imports that these loos were supposedly guaranteeing the payment for, they likely never actually happened or were vastly inflated.
So just fake paperwork, fake invoices, maybe shell companies?
Pretty much. Creating the illusion of legitimate international trade in diamonds and jewelry to justify drawing billions in credit from banks. It's a classic technique in large-scale financial fraud, make the paper trail look convincing, even if there's nothing real behind it.
And while India is reeling from this discovery, investigators are scrambling. Where's Nirav Modi? You said he was found in London. Was he hiding out?
Hiding in plain sight, maybe. Reports described him quite openly, actually, in a very expensive apartment, like £8 million, in central London.
Seriously? Not exactly keeping a low profile.
Not really. There were reports of him using aliases, but also apparently trying to start another jewelry business while effectively on the run.
Wow. The audacity is something else. Trying to launch a new venture while being sought for a multi-billion-dollar fraud.
It does speak volumes. And it also points to the wider issue here, the systemic failures.
Right. Beyond just PNB or even complicit officials, how did the regulators miss this? The Reserve Bank of India, the RBI, auditors.
That's the massive question hanging over this whole affair. There were apparently red flags, or should have been. The sheer volume of guarantees issued from one branch, the lack of underlying trade documentation if anyone looked closely.
And especially that SWIFT-CBS integration gap we talked about. That seems like a fundamental control failure across the banking system, not just at PNB.
It absolutely was. And the RBI had reportedly warned banks about potential misuse of SWIFT and urged them to link it with their core systems years earlier. But it wasn't fully implemented or enforced across the board, clearly.
So it exposed failures in bank governance, auditing, regulatory oversight, a whole chain of breakdowns.
Yes. It raised really tough questions about the health and oversight of India's public sector banks in particular.
Okay, so the scam is exposed. Modi is eventually arrested.
Yeah.
What about the aftermath? The legal side, the impact on banking?
Legally, India's Enforcement Directorate, the ED, moved pretty quickly to attach assets. Thousands of crores worth of property, jewelry, bank accounts linked to Modi and his companies were seized.
And Modi himself, besides the extradition case.
He was formally declared a fugitive economic offender under a new law, the FEO Act, which India passed in 2018, partly in response to cases like his and Vijay Mallya's.
Ah, that act allows authorities to confiscate assets even before a conviction if someone flees prosecution.
Exactly. Now, his extradition from the UK was approved by the UK courts and government.
But he's still there.
Yes, it's been held up by further appeals. His lawyers have argued against extradition based on his mental health and concerns about prison conditions in India. So that legal process is still dragging on.
And the impact on the banking sector itself? PNB must have taken a massive hit.
Oh, absolutely. PNB's share price plummeted. They had to account for huge losses. But the impact was much broader.
How so?
That was a huge wake-up call. Stricter regulations were brought in almost immediately. That SWIFT CBS integration became mandatory and urgent across all banks.
Finally closing that loophole.
Hopefully. And there was a push to accelerate things like the National Anti-Fraud Mechanism, basically trying to tighten screws everywhere.
And beyond just banking rules, did it spark a bigger conversation?
Definitely. It ignited a huge national debate in India about crony capitalism, potential corporate political links, the ease with which powerful people could seemingly manipulate the system, and just the overall vulnerability of India's financial infrastructure.
So wrapping this up, it's clear the Nirav Modi case wasn't just, one massive bank robbery, even though the amount was huge.
Not at all. It was much more revealing than that. It really shone a harsh light on some deep cracks in the banking system, in regulatory oversight, in governance.
And it exposed that complex, often hidden interplay between power, money, privilege, and outright deceit within these global financial networks.
It truly did. Which leads us to a final thought for you, our listener, to maybe mull over.
Yeah, what does a case like this really tell us about the hidden vulnerabilities that might still exist, even within financial systems that seem really robust globally?
And maybe more importantly, what kind of measures are truly essential beyond just ticking boxes to actually fortify these systems against such complex, calculated, and frankly, audacious deceptions in the future?
Something to think about. Thanks for joining us on The Deep Dive.